Welcome back to another episode of the Old Fashioned Real Estate Show. I'm Brian Leverage.
Jeff Holst.
There we go. We just reshot that, by the way, because Jeff wasn't very happy with the first one.
Right, it's true. Because we talked a lot and didn't tell people what we were talking about.
Yeah.
Which is why I wasn't happy with it. And this time we're way
Doing the
more
same
on
thing.
topic.
Yeah.
And so this is fantastic. I'm so glad we refilmed. But we do have an interesting topic today, something we've never done before.
Discuss some recent closings of properties we sold.
Right, so basically we sold a couple of our early syndications. If you want to know what syndications are, we did do a whole episode about that. We're not the mafia.
Yeah,
I think that's what it was called, right? We're not the mafia. Anyway, so we normally can't talk about this stuff, but now that we've sold them, we can, so stay tuned.
Welcome to the Old Fashioned Real Estate Show, where hosts Brian Leverage and Jeffrey Holst for our old fashioned real estate advice.
All right.
We're back.
We are back.
Yeah.
You're right. So, Brian, I hear you sold some stuff.
As did you. I heard you also bought some stuff.
I sold this building right here, the one on the shirt.
We sold our logo,
Yeah.
as a matter of fact, which was a little bittersweet.
It
but
was.
The check wasn't.
Yeah,
So,
that's true. That's
The
true.
check was sweet, really sweet, in fact. But
Sweeter for you. But.
so the logo, that's also true. So
he had a bit more of it than I
it
did.
was a sweet deal for everybody.
It was, for sure.
But so we had a back about, well, more than 3 years ago at this point, we purchased a 12,000 square foot multi-tenant single-story office building here in the Chattanooga submarket of East Brainerd.
Yes, and if you want to see what that looks like, it literally is the building on our logo. But just to be safe, here's a photo. I don't know if that works or not, but we'll see if the camera guy can figure out how to edit that in.
So when we bought that property, we paid $1.27 million. At the time, there were two tenants in it, paying a combined, I want to say, right about $12,000 a month. Okay.
Two tenants?
Two tenants.
Three.
No, there was just two.
Oh, you're right. There were two empty. So there's 5 suites total. One tenant took 2 suites. One
That's
tenant
right.
took the third suite, and
So-
then there were 2 empty suites.
One of the tenants, the existing ones, the largest tenant still, in fact, had expanded from 2 suites into a third, which they did just prior to us closing on the purchase. So that obviously helped with the income. But between expenses and debt service, initially the property cash flowed about $1,000 a month. So not great, but that's also with, we had roughly about 4,500 square feet. So more than a third of the building was vacant.
Right. And so let's talk through the numbers real quick. So how long did it take us to rent the 2 vacant spaces?
It took us about 2 years.
Yeah, so it wasn't fast.
Yeah, a couple different agents. That was our first commercial building, so we were figuring a few things out as we went along. But we leased one space about 6 months after we bought it to a title company. We did the renovations, then we charged them back for a portion of those renovations, and put them on a 5-year triple net lease, paying about I think it was $14 a square foot annually is where that started at, with 3% annual increases. So you've got your cash flow increasing in the future on that thing as a result of that, and then about
a year and a half later, it took us to get that last space rented.
Yeah, we leased that one out in I think October of 2020, as a matter of
Right,
fact.
so that would be
so just about 2 years
2
after,
years after we purchased it.
So, and some light renovations on that one and moved them in. They were paying about $2,000 a month. So basically, once we got those 2 tenants in, our cash flow went from about $1,000 a month to about $5,500 a month.
Right, and just to put it into perspective, so we bought the deal for, what did you say, just under
$1.27 million.
And then our financing terms were such that we had to come up with how much for a down payment?
Well, we got into that one with only 10% down, and we'd also budgeted about $250,000 for TI, or tenant improvements. Basically on commercial leases, the tenants can negotiate with you on who makes what improvements and who actually pays for those improvements. So we budgeted in about $25 a square foot on that thing, and that worked out pretty well because actually we didn't even spend nearly all of that.
No, we ended up with about out of the $250,000 that we budgeted, I think we had about $100,000 left at the end.
Yeah, and so and at the time, one of the lenders we were working with was able to do it on what's called a subject to purchase, meaning the appraised value once you've leased out all those other units is what they're doing the loan based off.
Right.
That allowed us to get in with just 10% down.
Right. So we were able to raise a relatively small amount of money. I think we raised $340,000 to purchase that. And we raised that from just three investors total. And the three of them got 50% of the deal.
Mm-hmm. Yeah. So they got their pro rata share of the monthly cash flow during our period of ownership, which obviously increased as we leased those units out. And then when we sold the building, which was accomplished in late August of 2021.
Right.
We
so just under 3 years.
Under 3 years.
3 years of ownership.
2 years, 9 months, or 10 months or so. We sold the building for $2.4 million. Right. We had refinanced the loan, but not pulled out any additional equity when we moved the loan from one bank to the other. So we owed about 1.26 or so when we sold it. Paid about a 4% commission or so on that thing, and then.
The net is the investors have basically doubled their money. In just under 3 years.
Yep.
In addition to getting cash flow during that time.
Yeah, I mean the IRR on that worked out to north of.
It was just over 30%.
Yeah.
Yeah. So that one obviously worked pretty well. We actually intended to keep it longer term, but we had an offer at a price that we thought would give a really good return to our investors, and we didn't have any other option. Now, granted, this is just one example. It does not mean that the next deal we do will do the same thing, but that one went pretty well. And we also sold another building this year that we raised, our second ever syndication, in fact.
Yeah.
So why don't you tell us a little bit about that deal?
So that was a commercial strip center, about 31,000 square feet. We purchased it really about a month after we bought the commercial office building.
Right. Of course, that was because the commercial building was delayed a while, or we would have. But we bought it and sold it about a month after.
Yeah. So we bought it in late November of 2019. Similar to the other one, there were a couple vacant units at the time. I want to say there was 2 of them. And, it was anchored by a Family Dollar, and we had a bookstore in it, both on some pretty good leases.
Sure,
and then,
a doctor's office.
And we paid $1 million. Now, not that it matters for this particular deal, but worth noting is that this property we purchased was a ground lease.
Right.
So we actually didn't own the land; we just owned the improvements.
Correct.
On it.
And this is an interesting side note on a ground lease. If you're ever dealing with it, the value of your ground lease is about how much time is left on the lease. That's a big part of how you value it. And when we put the property under contract, there was just over 20 years left.
Yeah, 21 years left.
And but we knew that we needed to renegotiate the ground lease in order for it to really make sense. And so.
We knew we would sell it, and the point being that while our lender that financed the purchase was comfortable, given that it was a 20-year loan, going, well, we'll be paid off before your lease is up, we wanted to have the ability to be able to sell that property later on. And
someone else would need a 20-year loan, and if there's only 15 years left on the lease, that might be
a problem.
Yeah.
Exactly.
So one of the things we did is immediately approach the owner of the land and work on extending the lease. And before close, we were actually able to get them to sign a new extended lease that went 60 years.
Yeah, we had 3 20-year terms.
Yeah, so we reset the 20-year term and then got 2 additional 20-year terms after that, options for those.
As well as a first right of refusal on other buildings on the same parcel.
Right, and also on the property itself.
Yeah.
So if they decide they wanted to sell that, then we would be the first people that get to buy it.
Yeah, and it's in a good commercial corridor with high traffic count, proximity to 2 interstates, etc. But so we paid $1 million for that, right? We put 20% down. In that particular deal, we raised $400,000 from investors. Yep. and who in turn got their pro rata cash flow. It took us a little bit longer to lease out one of those spaces,
Right.
Primarily because we tried to do some of it on our own.
Yes. So another lesson learned, but
Yeah.
again, it worked out really well.
Use a pro.
Yes,
Yeah.
it worked out really well for our investors in the end because we were able to rent those spaces out, and by doing so, we were able to create a much higher value.
Yeah.
Because the one thing about this, and we've done episodes like the Cap Rates Explained episode about how this works, but if you increase the net operating income of a commercial building, you increase the value.
That's right. That's right. So we sold it also in late August for $2 million. So basically
Double the purchase price.
what we paid for it. We had.
I think it was $1,950,000 actually.
Yeah.
So just under double.
Yeah. And in fact, you know a little bit about the purchase, don't you?
I might, yeah, I might know a bit about it. I might have seen a few of those numbers. But any which way, yeah. So I bought out our investors, and
Yes.
of course we went through the full disclosure protocol and made sure that everyone was fine. But we only had, I think, 6 investors in that deal.
Mm-hmm. Yeah, yeah.
And-
but again, everybody doubled their investment on the thing, plus the cash flow that they got, during that hold period.
That's right.
And again, we averaged out at I think just north of 30%.
Just over 30% internal rate of return.
Yeah.
Again, no indication of future performance, but the last 2 deals we did do pretty well, so we're happy about it, and
Yeah.
that is why we're celebrating. So cheers to everyone, and if you want more information about our future deals, of course, feel free to join our mailing list, which we'll put in the comments below, or just reach out to one of us directly in one of our Facebook groups or wherever you can find us. I mean, you can just come to our office. It's fine. Just come see us. No, come see Brian. I'm going to be in Puerto Rico. I don't know what he's doing, but I'm going to be in Puerto Rico.
I'll come see Ari.
Yeah, that's even better.